Good afternoon, Chris Robinson, Robinson Ag Marketing, with today's closing grain and livestock comments for August 14th, Thursday. Got to start off with the beans. After a 6 day, 70-cent rally, we clawed back a huge percentage of, we were down at 980, concerned about 960. We've seen a high this year twice of 1075. We made it to nearly 1050. So that was a rally that we tried to get after, tried to use to catch up on sales, make sales. We haven't had a lot of opportunities this year, so we wanted to use that. We did fill the gap from July 4th. It just looks like some people woke up and took a second look at the numbers, and we're still dealing with a large crop, large yield, despite the cut in acres and the shift to acres and corn. Um, like the old expression says, a bull needs to be fed every day. A little bit of a pullback here. I'm very interested to see how we settle tomorrow. I think longer term, beans, if there's a possibility for higher prices at anywhere in the row crops, it's got to be soybeans. I'm already hearing stories from guys where their elevators are calling them up and saying, hey, we'll give you a 1040 put, we'll sell two 1080 calls, double up. And I'm not a big fan of those because what they're doing is the moment they take the grain from you today, they're not taking any risk, they're hedging it. And they're asking you to take the risk that, oh, if we have a spike, you have to double up on your commitments to them. So I'm not a fan of that. It's just not something that I'm a big believer in. If you want to reward the 60-cent rally or 70-cent rally, reward it. Make a sale, then hold back 10 or 12 cents of the 70 and stay long on paper that way. Well, I don't know why you would give someone a free look, a free call, basically. And to boot, if it really takes off, which is what you want if you're a farmer, you're doubling up on your bushels. So it may sound good to some of you. Obviously, you're all adults. You can do what you want to do, but I'm not a fan of it. I think it's a way that you end up having seller's remorse because if something happens and we're at $11 and you're delivering double your bushels at 1080, you won't be happy. I would rather keep the floor for my beans. Raise your floor. We had 980, $10 floors. Raise your floor to 1050, 1040. Go ahead and do that if it makes sense to you. But just beware of those double ups. It sounds good until it actually happens, and then my experience has watched guys be not very happy about that. So that's my 2 cents about that. Take it or leave it. Moving on to the net changes for the day. D's corn fought back from 92 and a half to settle at 97 and a quarter, unchanged on the day. Sep corn, we got to within 9 cents of the 5 year low back at 360 and a half. We got to 369 and a half. We did bounce off that. Not unusual to see people step in there. We've had some really good exports coming out. Why? Well, we're at 5 year lows. We're at 5 year lows in wheat. It's not surprising to see end users step in. The cure for low prices is low prices. Now the question is, will it last, or will we get deluged with oversupply here, especially in corn, as we figure out what's going on with this crop moving ahead? So that's a continuation. I have not changed my ideas on that at all. Defend, defend, defend. Keep your upside open. If we do get some sort of a rally, I want you to be able to sell into it. I don't want you to feel like you have to sell corn here right now. That is what the puts are for. Anybody that's been working with me, you're well aware of the fact that we had some opportunities early in the year to at least defend 450 corn. 450 corn looks pretty good if we go to 380. Um, and I already starting to see some tweets today about, some farmers aren't going to be planting next year if the numbers don't get better. Well, you've got D's 26 corn at 444 right now, so you've got to do the math. If you're someone that's on the bubble because of your way your operations set up, what your borrowing costs are, what you have to pay if you have to rent, I know who would step into a situation where they're walking into a loss immediately, and what you're doing is you're hoping that we get some sort of a rally where you can make some money. So it's going to be a year for the spreadsheet for 2026, and that's what happens when we have a 3 year downtrend and we're at 5 year lows. People have to start making those kinds of decisions. I get it. I understand it. Um, it's something I can help you with. Your banker can help you with. Absolutely, positively, for guys that are in that situation, you're going to have it's going to be a math problem this year. No two ways about it. Looking on to how do the grain settle for today. Again, D's corn unchanged at 397 and a quarter. November beans down 15 and 3/4 cent at 1028, and that's after hitting a 6 week high overnight at 1049 and a quarter. So hopefully you used it to rally. Hopefully you used it to defend, catch up, and make sales. Nobody wants to go back to where we were in December of last year at 960. Nobody wants to go back to where we were in April on the first tariff thing at 970. So yeah, 1030 looks a lot better to me than 970, and that's kind of all I have to say about the beans. D-Sweet, uh, Chicago, new lows, 524 and a half, traded all the way down to 521 and a half. December D's, Kansas City, traded down to 521 and a half. I can't remember the last time was there was no premium between D's with KC and September. They're both sitting there right there, basically at the same price. Minneapolis also cannot seem to settle above $6, which is a big psychological level. If you look at all those charts, they're all on their heels. There's no two ways about it. You can't really dress it up. I'm looking at East Minneapolis. Is this are they gonna carve out a bottom here at this 590 level, 592? If it doesn't, what's your plan? If it doesn't do that, you don't want to be sitting there if we're 20, 30, 40 cents lower and you're long East Minneapolis wheat and you don't have a hedge. So definitely look at hedging it, especially if you've got that crop in the bin. Where you get in trouble, pre-hedging sometimes with futures is if you don't grow the crop. But boy, if you know you've got it in the bin, you should definitely be using a strategy there where you're locking in your worst case scenario either with a put or with futures. Soybean meal, and I still think that soybean meal might be a bit of a buy here, depending on what happens with the beans. The key level to watch there in SEP, DEES, we're kind of sitting right there. So if you're an end user, we're basically at 9-year lows, 10-year lows. It's giving you an opportunity to definitely take some protection in case, 3 months, 4 months from now, really, when nobody can see over that horizon, if we're sharply higher, now would probably be a good time to, kind of like they say in the deadliest catch, go set the pots, right? You have to set the pots. You got to set the trap. And the trap would be buying call options now when nobody wants them. That's your hedge if you're an end user and you have to feed out a lot of meal. Finally, we're going to finish up with cattle, livestock. A weird day in cattle. Started out earlier. It looked like it was going to go higher. There were some rumors around this market's. One day we were talking about the screw worm is back. The next day, oh no, the ag secretary may be making a speech that they're going to allow beef to come back in from South America. That's really what hit today. Lots of times these markets trade on rumor more than anything. And we'll see. If there's an announcement tomorrow, we'll have to deal with it the way it is. These markets are still relatively at all-time highs. October cattle traded 230.30 before trading down to 225.25, settled down 260 at 226.82. September feeders, again, we were looking for that 350 print one more time. We're not able to get it. We hit 346 and 3/4. We opened at 346 and a quarter. Looked like we were going to pop, and again, we had a hard break from that 46 level down to 38. We did come off the low a little bit. We finished about $2 off the bottom. Actually, $3 off the bottom from 338 to 341. And again, we'll see what happens tomorrow. If you're unhedged, get a hedge. That's all I can tell you. This is a market that really lends itself to having puts. I think with these markets being as expensive as they are, you've got to be looking at doing put spreads. If you do a vertical bull put spread, if you don't know what that is, certainly educate yourself. If you want to call me, I can explain to you how to do it. It does allow you to have a higher floor with less money invested. You just have to make sure that if you're spending $3, you're protecting, at least 12. If you're spending $5, you're protecting at least 20. You don't want to do a situation where you're spending, $3 to protect 6. That doesn't make any sense. Again, if you're new to options, if you're curious how to use them, please give me a call, 312-638-8868. I can help explain it to you as best I can. I've been working with farmers and producers now since 2010. Prior to that, I was on the floor for 17 years, trading my own account. So I can help you with that experience. Certainly, I've seen a lot of markets, and I've been through enough minefields where I can share with you my thoughts, and more important than my opinion, just how to defend yourself. The worst part of this business is when your opinions backfire on you and you're left, with a bad situation, which might have been made less worse if you had had a hedge. And we're gonna wrap it up with lean hogs. Lean hogs, they do look like April out there, April 26th. I talked about it in leather this morning. We've hit a wall there at 90 cents. And now we traded below 87. If you've got nothing on, I'm not worried about the 3 cents between 87 and 90. I am worried about the possibility that we go back down to 75 cents, which is where we were on the April swoon remember when the stock market had a break. So that was all related to the tariff news. So protect your hogs if you've got them. Again, if you don't know what to do, if you're curious, give me a call. I can walk you through it. Chris Robinson, 312-638-8868. Have a great rest of the night. We'll be back at it tomorrow. Tomorrow's Friday. Friday's settlements are very important because everybody gets to stew about it all week long. So Fridays are big. Hopefully we can get after it tomorrow. This is Chris Robinson. Have a great night. Thanks for listening.